How demographics shape stock market trends, 7 shocking insights and opportunities. Here are the lessons for this blog. Lesson 1. Demographics are a fundamental driver of market trends, shaping both consumer behavior and investment opportunities. Understanding population shifts is essential for forecasting long-term industry growth. Lesson 2. Aging populations drive demand for quality healthcare, creating opportunities in medical services, pharmaceuticals, and technology. Investors can benefit by focusing on companies that address the needs of seniors. Lesson 3. Gen Z's digital-first approach is transforming the investment landscape, pushing traditional models to evolve. Their influence is spurring growth in fintech and sustainable sectors. Lesson 4. Global labor shifts and migration patterns are key to unlocking emerging market potential, particularly in remittance-driven economies like the Philippines. Capitalizing on these trends can enhance portfolio resilience. Lesson 5. The fertility crisis alters consumer behavior, driving demand in education, luxury, and niche markets. Investors should adapt their strategies to capture opportunities emerging from changing family dynamics. The hidden demographic engine driving markets. Demographics are an often overlooked force that quietly reshapes markets. And this holds true in the Philippine stock market. While Wall Street focuses on quarterly earnings, long-term shifts such as aging populations, emerging youth spending power, and migration patterns play a pivotal role in driving market trends. In the Philippines, these demographic dynamics are reflected in rising disposable incomes, changing consumer behaviors, and shifting investment patterns. As the nation's middle class expands and the government implements progressive policies, demographic insights provide clues about the industries that will flourish in the coming decades. With an anticipated wealth transfer and a rapidly evolving labor force, investors have a unique opportunity to harness these trends. The Silver Tsunami, aging populations and healthcare opportunities. Aging populations are reshaping markets globally, and the Philippines is no exception. The so-called Silver Tsunami is not just about a growing elderly demographic. It's about the significant ripple effects on healthcare services, pharmaceuticals, and related industries. As more Filipinos enter their senior years, there is a heightened demand for quality healthcare services, long-term care facilities, and innovative medical technologies. This shift is driving growth in healthcare stocks as investors position themselves to benefit from increased consumer spending on health and wellness. With an expanding senior population, companies in the Philippine healthcare sector, from hospital operators and pharmaceutical firms to digital health innovators, are poised for sustained growth. Furthermore, similar to trends observed in more mature markets, there is a notable trend towards specialized care, preventive health measures, and chronic disease management. Gen Z's influence. The rise of the digital investor. The digital revolution is being driven by younger investors, particularly Gen Z, whose influence is now permeating the Philippine stock market. With a significant portion of young investors embracing online trading platforms and mobile apps, the traditional norms of investing are being disrupted. Gen Z, armed with technology and a fresh perspective, is demanding zero-commission trades, real-time data, and user-friendly interfaces. This generation's approach is not only reshaping retail trading, but also encouraging companies to adopt sustainable and socially responsible practices. In the Philippines, fintech startups and digital brokerages are experiencing rapid growth, driven by tech-savvy investors who prioritize transparency and efficiency. With an average age of first-time investors trending downward, platforms such as G-Invest and other local digital apps are seeing unprecedented engagement. Global labor shifts and migration, emerging market dynamics. Demographic shifts on the global stage have a profound impact on emerging markets, and the Philippines is uniquely positioned in this regard. With a burgeoning workforce, the country is experiencing the dual effects of a youthful labor pool and significant overseas employment. Remittances from overseas Filipino workers, OFWs, have long fueled domestic consumption and economic stability. Simultaneously, internal migration from rural areas to burgeoning urban centers drives demand in sectors such as real estate, consumer goods, and financial services. This demographic dynamism is creating a fertile environment for investments that capitalize on both local consumption and international labor trends. Companies in the Philippines that are attuned to these shifts are well placed to benefit from the economic empowerment brought about by remittances and increased consumer spending. The fertility crisis and changing consumer behaviors. The fertility crisis is redefining consumer behavior and, consequently, the investment landscape, including in the Philippine stock market. With fertility rates declining in many countries, including emerging economies, households are evolving, often resulting in smaller family sizes and altered spending patterns. In the Philippines, these shifts create a unique scenario where increased disposable income per household is driving demand in sectors such as education technology, pet care, and luxury consumer goods. Companies that traditionally cater to large families may need to pivot to capture the spending power of dual income, no-kid dink households, or focus on niche markets, such as premium services and digital education. This demographic trend also paves the way for contrarian plays in fertility-related technologies and healthcare services that address reproductive health challenges. As consumer priorities shift from volume-based to quality-centric spending, investors must consider how these changes influence revenue streams across various industries.